Ladies and gentlemen, welcome to a new episode of the FinTech Hunting podcast. We've got an amazing guest for you today. He's a tech innovator, an industry thought leader, an AI evangelist. Please help me welcome back to the show, Tim Nguyen, founder and CEO of BeSmartee. Tim, welcome back to the show.
What's up, Mike? How you doing, sir?
I'm doing well, and yourself?
Oh, fantastic. Had a great fourth. We had about 22 people over that spent the night, so I'm still recovering.
I can imagine that is a house full, but it sounds like you had a great time. So speaking of the fourth, we're now in the second half of the year. Let's dive right in. You and I have had a number of wonderful discussions, and I want to jump right in. Talk to me about kind of the strategy right now in the mortgage industry as it relates to tech, and why are we so heavily dependent on customized systems?
Yeah, that's a great question. What I found when I entered this, so I've been in this industry for quite a while, right out of, I left college early actually to get into mortgages. And that was one of the things that struck me. Everything is just so unique, even though we all sell generally the same product. And, it's really fascinating, but there's so many customers that rely on customizations. I mean, think about the stories of people who spent 7 figures on customizing Encompass.
Right.
And also paying Encompass 7 figures, right, at the same time. I don't know what it is. I really don't. It's almost like a accepted way of doing business, right? The policies are in place, the workflows are in place, make the technologies fit it, rather than looking at it from a new lens, right? You have new technology that's changed the way we do business. But that's certainly one thing that we're starting to see, though, on a positive note, is people are starting to get away from customizations because they realize it just doesn't allow them, number one, to be nimble enough when markets turn up or down. It's expensive. It just simply costs a lot of money to maintain and fix and update. But in those two things, I think if you put them together, the time, the cost, and the inflexibility, we're starting to really see people say, you know what, I don't want the custom. What's your best practice? And what's your best practice, other vendor? And what's your best practice, vendor number 3? And they're trying to figure out, okay, if that's how we intake a loan application, that's how we run credit, that's how we run AUS, is that the best way? Right? Not just, hey, can you do X, Y, and Z? But tell me what your best practices are. How can you configure it? Is that going to work for me? So we're really starting to see that mentality change as vendors like BeSmartee get vetted out in the industry. Because really, at the end of the day, it's the difference between configuration and customization.
That's what I was going to ask you about. Talk to me about configurability, because I think people think either it's highly customizable or I just have to take it out of the box and I can't do anything. And that's not necessarily true. So help distinguish, what's the difference between configurability and customization?
So configurability means something that the software provider already provides, and it just requires usually a system admin, or if it's a more complicated one, support from the vendor to flip some zeros and ones, configure it, right, tweak it, and deliver it. And that means that the software vendor has to have thought through the various ways someone can run credit, or various ways and points in the workflow someone wants to automate underwriting, as 2 examples. Customization is really bespoke, right? Hey, your software doesn't do this the way I want it, or doesn't do it at all in some cases, or does it in a very poor way. I'm willing to spend money to customize it, the time to write user stories, to test it, to maintain it, to get the exact fit that I want, right? Think about, buying those Mini Coopers, right? Highly configurable. No Mini Cooper on the road looks the same versus getting a true custom build from the shop. One's going to be much more expensive, longer, more painful, but you're going to get exactly what you want if you're willing to deal with all that pain. And the other is, hey, I get to get it out. I get to turn it on. I get to drive it right away.
One of the things I'm seeing in the industry, and I'd love to get your insights on, is so many lenders are, I don't know if this is the correct term, are really facing vendor fatigue. Kind of like, I'm getting hit up all the time. Everyone tells me they got the latest, greatest thing. And I think it's prohibiting some lenders from really looking at solutions that could help them. Kind of what's your take on that?
Yeah, I think vendor fatigue is definitely a real thing. I mean, every day that's our job, right? Is to work with lenders and sell our product. And people get tired. Every marketing pitch saying feels the same. Every demo eventually feels the same. Questions get, merged in from one vendor to cross the other. And ultimately, people make the best decision they can. And unfortunately, I think what we see more often than not is those decisions, especially when they come with long-term contracts, or poor diligence in some cases, it doesn't work, right?
Yep.
I have this vision to deliver this experience. LOS is probably not going to change, right? That doesn't change very often. But the POS, the CRM, the pricing engine, right? These different data integrations could change and ebb and flow. Eventually, if you're not careful, you're going to have a Frankenstack, right? You're going to spend a lot of money on vendors. They don't talk to each other. They don't work together. And you're going to spend customization money to get it working, or going to be, at the beholden to the vendor and their roadmap to get it working and turned on. And sometimes even when it's turned on, it's not exactly the way you wanted it. Right.
That's right.
And, we did some research recently. I think it's like the average software vendor or average mortgage company has like 17 core vendors just to close a mortgage.
Oh,
Those are a lot of systems, a lot of different platforms.
Lot of systems.
And even when they're integrated, they're not always integrated, and they're integrated in some cases, but not others, right? It makes for a very complicated loan manufacturing process. And that is the one thing here, right? We're in a commodity business, right? We're not selling the next, we're not selling the next AI innovation. We're not selling the next, widget that's gonna, take over the world like the Snuggie, right? We're all our clients sell a commodity, and then you got to get that manufacturing process, the cost of manufacture down, and put that money away during the slow times.
And so what is the solution? How do you find that balance of getting the technology in the stack that I need without having a lot of redundant, having 17 different vendors? How do you kind of find that right fit, and how do you vet to make sure you're getting the right vendors but not spending more money on ones you don't need?
Yeah. I think it starts with a true factual, right, lift up the kimono type of investigation. Got to get to the truth. Got to get to current state, get a gap analysis going. I know it's another report. It's more labor, but you got to get a lay of the land. And I would start obviously with your vendors. I would start with who they're integrated with. I would interview operations and sales and production and all that stuff. Figure out where the pain points are, what the gaps are. And once you get a nice clear, if you can't put it all in 1 or 2 pages, you understand how things connect, you're not going to be able to solve it, right? Because it is complex under the hood.
That's right.
You got to get that layout first. And then I would say number 2, it has to be a mindset shift at the organizational level. It just has to. Unless you're a mega corporation with 10,000 employees, maybe you can run 3 or 4 major initiatives at once. But I think for your average company, call $500 million to $3 billion in originations, you're gonna have to focus on one thing. Is it growth this year? Is it operational excellence? Is it tech excellence? But I think what you do is you have to have that mindset shift at the very top. You have to align the whole organization, the people and the processes and the rocks and the objectives to this one mission. Because this isn't something you can solve within 6 months. You identify all the problems laid down in about 2 to 3 months. Then you got to talk to your vendors. You got to find new vendors. You got to get those to work. But I think it's worth the effort, because once you get all these vendors, right, those 17 vendors could be 12.
Right. And what kind of difference would
That
that
be
make?
completely new.
Absolutely. So where should lenders be focusing? Where should executives be focusing their time, and what should they be focusing on for the second half of the year?
Well, I think there's 2 areas from a tech side. Number 1, maintaining what you have, because volumes are, starting to get a little bit better. All the metrics are pointing in the right direction. There's some stability that we're seeing in the rates and the volumes and whatnot, and buying behavior. We're also a peak season. So having just to maintain it, right? That's the first and foremost. Then I'll start hunting new. What I would be looking for is ways to grow, and we know growth in this space, right? It's mostly about recruiting,
Right.
ways you can recruit, retain your top producers, bring on new top producers. If you're in consumer direct, I'd be looking at top of the funnel efficiency to get ready for that right now. There are lenders out there. I was talking to a lender the other day. They're closing about 130 loans a month right now. They're staffed up for about 500 loans. It's a big company. They'll probably get there, but they need uber efficiency right at top of the funnel and conversions. Right. I would continue to look at that as a long pole in the tent over the next 2 to 3 years. I would look at operational efficiency. Probably changing out your LS is not going to happen, right? It doesn't happen for most. It's a very big decision, what I like to call a bet the farm type of decision. But there's ancillaries, right? There's PPE, there's POS, there's credit, there's title, there's fraud. There's so much still to automate, so much still to integrate and get efficiencies out the door. But at the end of the day, right, we've all heard the analogy, right? People, process, technology. Got to get the people aligned with a common goal. The business processes can't be over cumbersome.
Right.
Right. A lot of these policies have been written for, it's been stacked in and overlaid, right, for 15, 20 years. You got to go in there, rip it out, just focus on streamline, and the technology follows.
And as that follows, talk to me about what does an implementation look like, an effective implementation. People throw all kinds of terms. We can get you up in 45 days. We can get you up in this. What does a real implementation look like to set the correct bar?
It all varies on scope, and I hate answering a question that way, that it varies, but it does. The fastest we've ever gotten integration done was 7 days. There was a clear business need. Everything was out of the box. They just needed a basic push to the loan origination system to start.
Okay.
That got done in 7 days. Normally, we would have done that in about 2 to 4 weeks, right? When we weren't under the gun for a certain business objective. You add scope. I need this. I need that you don't have. I need what you have, but I need a tweak. I need every configuration turned on and off, right? I have a very cumbersome, change management process, for instance. So the more scope and more process we add, I've seen implementations take 6 to 9 months.
Yep.
Right. It really does all vary. What we're really kind of encouraging the market to look at is to look at out of the box. Clearly, these vendors have customers. There's thousands of loan officers and processors using it. The volume is going through. So why is it the way they do X, Y, and Z not acceptable in your model, right? This is an opportunity to really challenge what you assume you've been doing all these years is actually the right way. It might be the best way.
Right. And there's some pain and you got to do that discovery. But in doing that, you're going to uncover a number of things that you need to.
Yeah. And focus, I think, is key. Just sending those rocks, right? One of the biggest mistakes I see is, and we do it sometimes in our own company, setting too many rocks and OKRs, where it's just not reasonable. And then it doesn't get hit. And then it's okay. And then there becomes a culture of like, it's okay. We missed a rock. It's not a big deal, right? I'd rather have less rocks that are laser focused and we hit them all the time. And we start getting into that mode and mindset that we set rocks, we make it happen on time, 2 specs.
I love it. As lenders are out there in the second half and they're trying to vet partners and solutions, what should they be looking for in a technology partner?
First off, you need to know what you're solving for. Can't tell you how many calls I get on. It's like, hey, just looking, don't know what we're solving for. Typically, we just don't take those conversations to the next step. We want to, but unless the need has been articulated, the vet has been articulated, it's really hard to help, right? So I would start there. As you start talking to these vendors, get to know them, get to know their features, get to know their products, get to know the value. Can it do what you can? Can it do at face value what you need it to do to solve a problem? And every vendor is going to say yes. So you got to really ask the hard questions. Ask for evidence points. Ask for examples, live demos. Don't ask for screenshots and PowerPoints, right? Then the next step is you got to make sure it works with your tech stack. Just because vendor X can do A, B, and C, well, but can I do it with my tech stack?
That's right.
Am I willing to modify my tech stack? Is objective X that important for me? Because if it's not, then don't even waste your time talking to the vendor.
Exactly.
All right.
What's next for BeSmartee the second half of the year as we look into 2026? What are you guys really focused on, and how are you adding value to the marketplace?
Yeah, so we are, so as you know, we launched our native mobile app about a year ago. To that end, we're adding plenty of users and rolling it out. We just want to get more people onto this native mobile app, number one. And meanwhile, what we're doing is we're building out a version 2 of our software. The features and functionality doesn't change. The buttons might move a little bit, right?
Right.
But ultimately, it's going to make configuration much, much easier than it is now. That means if you come back to me and say, hey, I'm opening up a new branch, got 40 people joining us in this region, no problem. I'm adding a new product, no problem. Adding relationship pricing at my bank, not a problem, right? Configuration is going to help people simply be more nimble and stay within bounds, so you can avoid the customization. So that's more of a back end thing we're doing. Ultimately, we're also starting to inject AI into our software, starting with third parties like Candor, for instance, right? And then building our own AI out to deliver to our client base as well. And that will keep us busy for a good couple of years there.
Absolutely. And I'd love, you and I could go on and talk about a lot of other topics in AI. I love that you're introducing it and you're doing it strategically, not just putting it in or adding it as a buzzword that a lot of companies are. You guys are strategically figuring out where it's going to make the most sense for your client. You also have an upcoming webinar, I believe, on July 23rd. Tell me a little bit about that.
Yeah, it's definitely join if y'all can. Otherwise, it'll be recorded. But we're going to be talking about the customization versus configurability dilemma, what that really means, what's the pros and cons of both, how to negotiate even customizations, how to make sure you're getting what you paid for, how to vet configurability, really just kind of get into the weeds a little bit, not just a high level of we'll use some real examples and use cases of here's an example where configuration versus customization. It can be done in 3 days or 3 months. It costs $0. It can cost 30 grand. Right? We're going to really walk into that and really help people, because everyone's dealing with this dilemma every day, right? With whatever vendors that they're using. We really want them to just kind of walk away with better questions, better ways to hold their vendors accountable, and spot any issues around the corner that might be coming.
I think it's a very timely topic and a very important one. So any of you listening, please make sure you join BeSmartee on Wednesday, July 23rd. It's at 11:30 Pacific Standard Time. I'll also include a link to that webinar so you guys can join it. Tim, as we wind down, what's the best way people can get a hold of you if they want to take a look at your new native mobile app, if they want to see it for themselves, if they want to have some of these discovery discussions that we've talked about? What's the best way they can get a hold of BeSmartee?
Yeah, just go to the website, BeSmartee. That's BeSmartee.com. So BeSmartee.com. Contact us. That'll make it over to our sales team. Otherwise, you can just email sales@BeSmartee.com and get a hold of somebody right away.
Tim, I can't thank you enough for being a guest on this episode of the FinTech Hunting Podcast.
Thank you, Mike. Appreciate you having me on.